Hi, this is Randy Finney with Right Side of the Chart, and today's Monday, August 28th, 2017. In this video, I wanted to cover the energy stocks, particularly the oil and gas exploration and production stocks that are uh, components of XOP. XOP is an official trade ID on the site, and the story on XOP is this what stands out to me is this bullish falling wedge pattern. You take this line here, this white trend line down below that shows the divergences. Prices are making a lower low versus the indicators down below, the PPO in this case making a higher low, RSI making higher lows, and we're almost there, but we haven't yet confirmed that divergence. Now, by confirmed divergence, it's something a term that I use, I've made up. What I look at is I want to see a bullish crossover in the PPO, meaning this fast line, the PPO line crossover the signal line. That hasn't occurred yet, and it may not occur. We may be rejected there. We could roll down, and then the divergence is taken out. And an important thing to note as I go through these stocks, I'm going to show you a common theme that I'm seeing amongst these stocks. And if you guys have followed me for a while, you know I hate contradictory analysis. I hate to sit there and say, oh, well, XOP may go up or it may go down. We all know that's a given with any stock. Let's just not. But I try to when I look at a chart or a sector, I try to pick, only first of all, only focus on something I see a clearly bullish or bearish pattern. This I can tell you right now, I see mixed things in the charts. I see the potential for a bottom here in the case I'm going to go over. I'm going to talk about these divergences, a lot of these stocks that support. With XOP, it's a case more of a support zone. You can see these two white lines that I have here. This is a support zone. So there is a potential for another thrust down. We don't have any evidence of a reversal of a bottom yet. We're up. We bounced a little since I put this on as an official trade idea. We had a couple, about a week of green candles. Today we're down probably largely because oil's down. And I think that's most likely due to the hurricane. A lot of refineries are taken offline over there in Texas. Hope everybody that lives over there is okay right now. Um, and we'll see if that, if that has a lasting impact on oil prices, because ultimately where oil goes, that affects these stocks. So, anyways, this is the bullish case. Bullish falling wedge, falling down to support. XOP, and that's an ETF. Again, a sector ETF. It's down 35% since the end of last year. Pretty healthy correction. Um, so I can see a little downside in the charts, but I can also see the potential because of these divergences that are ready to be confirmed on any more upside. I can see the potential that this could be the bottom, and these patterns are too powerful to ignore, in my opinion. I think there's the charts are pricing in a lot of potential gains, and I think where we go in the next couple of weeks will determine if that's going to play out or not. I do think that if the bearish case is going to come to fruition, and I'm going to cover that in a second, then it's going to happen soon, and I'll tell you why. So anyways, there's the first target. First target comes in, it's this horizontal line, but it also comes in right around this downtrend line. So this is a very key level. So if we do get a bounce here, what you want to watch for is how prices act there. Now, my expectation, as is the reason for any multiple price targets, I expect a reaction. The odds are favor reaction as each price target is hit. So if we punch up there, go to about $31, I always set the price targets just below the actual resistance level, pull back, and then breakout, that would be longer term bullish, in which case I may extend the price targets. I have a potential third target up here, and I may even add additional targets. However, the bearish case, and I'll hit on this on a couple individual stocks, show it a little more clearly. And I'm seeing it also on the big dog in the sector, ExxonMobil, XOM, has this what could be a bear flag continuation pattern. For those of you not familiar with bear flags, uh, this would be your bear flag right here. And so it's something to watch. We haven't broken down from it yet. And there's a couple things to watch if we do break down. I'll go over that in a second. But with a bear flag, you have an impulsive move down, a mostly unidirectional drop, swift drop like that on impulsive selling. And then you have a period of consolidation. The consolidation occurs on lighter volume, as you can see here. That's very indicative and typical of a bear flag pattern or any continuation pattern. And then if the bearish case is going to play out, you'll see a downside break of the flag, you'll see volume expansion, you'll see impulsive selling, and you just simply take the length of the flagpole, measure it, put it to the top of the flag, and that gives you your measured price target. So this could take us all the way down to the $26 area or so, and there's even a little support just below there. So let's say 25.50 to 26 would be my target if this bearish scenario plays out. So it's certainly something to watch for, and it is most certainly a reason if you are looking and positioning for a bounce right now in the energy sector like I am, don't get married to it. Don't fall in love. If you see this bear flag break down, you're going to see it on a lot of these stocks that I'm covering, then you need to heed that warning. However, fewer things are more bullish in trading than a failed bearish chart pattern breakdown, especially a bear flag. I've seen that before. I've seen it on head and shoulders patterns where you get a breakdown, or it doesn't even break down and prices break to the upside and start moving higher. Both of those would be bullish, meaning either we start to move higher and foil that pattern, or we break down, it looks like the real deal. That's one of the most powerful things out there because the shorts tend to pile in on the bear flag breakdown. Longs tend to jump out, capitulate, say, oh no, now we're going down farther. And if, and only if, again, don't jump the gun on it. If you see a bear flag breakdown, I would not short that. And if you have to cover, get out. But if you see it break down and then suddenly reverse and come back up above the flag, that's very powerful. So I'm trying to cover these scenarios here. And again, my goal isn't to give contradictory analysis, but I wouldn't be doing my job if I didn't point out these potential bear flag formations. So back to what I'm seeing now. This is what I'm focused on now. And until and unless these bullish patterns are foiled, I'm looking right now for intermediate term bounce that could last for weeks or even months in the energy sector. And that could change on a dime, as I just explained. So here's APA. I'm going to go through these. I flagged my favorites within the sector, so I'm not going to cover every single stock within XOP, just a handful, about 2 dozen of the names that I think stand out as above average gain potential, very attractive risk return ratios, etc. And I'll go through these. I think I have this list sorted here by, yes, I do, descending by market cap. If you look at this column, market capitalization, keep that in mind as I go down the list that the larger the market cap is, and there's not a hard set rule, but typically the larger the company is, the less risk. There are quite a few energy stocks that have declared bankruptcy, have just gone to the wayside in recent years, and there'll probably be some more going forward. You tend to find those companies down, the lower market caps, under $100 million and stuff like that. The gains are the gain potential is huge, but so is the loss potential and the risk that suddenly you can wake up to that stock, opening down 50% or 80% or more on a bankruptcy filing. So keep that in mind. With that being said, this is an ETF, and they usually jettison out any companies that don't meet their market cap criteria. So we're really not going to cover any of those today. Um, Other than maybe one idea that I shared in the trading room. I'll talk on that one. All right, so I'm going to go down these in order. Market cap, there's APA, almost had divergent low on the PPO. We made a slightly lower low. You can see that the PPO is turning up, but it hasn't yet made a bullish cross. Even a bullish cross on the PPO without divergence, just like the MACD, that in itself is usually a bullish technical event, and some people use that as a confirming buy signal, especially after for a trend reversal. But again, you can see the potential dark cloud here, either bull flag or bear flags or bearish pennant patterns in a lot of these stocks. And that one may have already broken to the downside. So let's watch, see what happens in the next couple days in APA. You want to step in now. Don't give it too much rope. That would be, yeah, I can't give individual investment advice, but I can tell you what I would do. I wouldn't give it too much rope if I stepped in. And that's not one of my favorites. I just wanted to point it out because it is flagged. Amaretta Hess Corporation, I should say. Same story, divergent low. We had divergence heading down here. We had a pop on that divergence, another low divergence. There's the bear flag drawn, so you can see the flagpole and the potential. Now this would be a beauty if it gets down here. There's that reaction low from early 2016 down around the $32 level, 32.50 actually, and that's about exactly where that bear flag, if you see the measurement, the move leading up to the flag formation, and you add it to the top of the flag, and that would give us a target almost perfectly down there. So this one I'd be buying with both fists if it got down there and the charts confirmed the daily and or the 60-minute charts. But again, there's a possibility here because of these bullish divergences, potential divergences. We need to see that PPO cross, that we may either get that false breakdown out of the flag, or we just turn up and the flag never pans out, in which case both would be a very bullish technical event. So there's one, that again, that would be a great buy if we get there. But I always have a plan A and a plan B with a stock. If I'd love to buy it at 32.50. If the market gives it to me at that price, I'll go there, but I'm not going to ride it down to that level. However, if it never gets there and never sees 32.50 again, or at least not for a long time, be ready on the lookout for a reversal and a move all the way up here to 45.50 or so, which is, and this is a big cap, mega cap name. That's about a 19% gain. So again, you get down to the smaller stocks and the gains are, often measured in the high double or even triple digits. MRO, Marathon Oil, positive divergence. There's a positive divergence, and you can see the lines here. As I said, I often say these lines on my charts, if they're below, you have a horizontal line that's support. That one we might want to put at the recent reaction low. And if the lines are above, they're resistance. So, it would be bullish to see us take out this level here at 1125. And I don't see a lot stopping this stock up to about 13, a little over $13 if that gets taken out, and then ultimately this potential downtrend line here will probably come into play. Another one that's flagging, you can see that flag action right there. See the flagpole? So again, these guys are really at a pretty key technical inflection point. Um, Big gain potential, also some profit potential if you want to short them on these flag breaks. Just keep in mind the sector moves very fast. PE, Parsley Energy, we had bullish divergence here. We had a little pop. There's a continuation, extension of the divergence. So we have double positive divergence. Um, and if this one reverses, you're going to at least come up to this trend line here. That would be my first target. I should say there's a little bit of resistance right here. Hit these reactions. You can see that line there. That's at 26.22. So if that gets taken out, then we'll probably head up to that line. Otherwise, if we don't get a reversal, the trend is still bearish on these guys. Okay, next one up is NFX, New Field Exploration. Just a nice, clean looking bullish falling wedge pattern, excuse me. Now that may be extended. Here's one option. This is why I'm keeping an eye on the sector. Like I said, these charts seem to line up. I see some decent support. There were a lot of reactions here on this line. There was a spike down below, but this would be the level I'm looking at. If these divergences don't play out at this time, there's still the potential for the divergences to remain intact if this thing wants to walk its way down here. Maybe we have to extend that lower trend line there and then come down to this level, and I think it would be a nice buy here around 22.50 and change. And if so, we change these divergence lines, but you'll still have that bullish divergence in place. This is what the wedge would look like at that point. So again, they may reverse shy of that those 2016, late 2015, early 2016 lows in some of these stocks, or we may go down a little bit. And if we drop down, try to quantify it for you, you're looking at about another 11% or so downside. So could get pretty ugly, and it may come in a swift move too if we get there. Here's Chesapeake. This is a pretty big one, 3.5 billion now, not as big as it used to be, but nice resistance. Look at all these reactions back here, and this was a trade idea, I guess, way back when. T2, T1 was hit back here, T2, and we looks like we got out of that one right in time, and then it set up in this bull flag, popped out, and continued higher. So we had a divergent high, a double top, that marked the end of the run, and this one's been in a downtrend since. But we've come back to that former first target level, nice resistance back then, which is now support. We have potential divergence in place, and like everything else, I mean, it's funny how these stocks are the charts on each one might not mirror the other one, but the crux of what I'm seeing here, these potential divergences waiting to be confirmed with just a little bit of upside here. Otherwise, these divergences are also, a lot of them are at the cusp of being burned through. Some stocks, as I went over a minute ago, can have another thrust down and still have divergence in place, whereas some of these, at least here on the PPO, we get much more downside in Chesapeake. That divergence will be burned through. There's still a little bit of room to go on the RSI, but again, at support with bullish divergence in place. There's a downtrend line to watch as a potential target, and another one that looks good. SWN, Southwestern Energy Company. There's a falling wedge type pattern, bullish divergence. You can see all the levels. We're at resistance right now. So this one needs to pop. You have intersecting resistance levels. My preference is to be safe and wait for both of those levels to get taken out. And if you do, that's a pretty bullish event. Two, not one, but two resistance levels taken out around the same time. That'll take you up to this level here, probably get a reaction and then continue up there. And that would be at least a swing target. Longer term targets, again, if the sector firms up, if oil prices firm up, then there's a lot of potential longer term in these stocks. But right now, I'm just looking at the swing trade potential. PDCE, PDC Energy, there it is. Bullish divergence, almost confirmed. Again, not yet confirmed. Like I said, it's almost, sound like a broken record, but it's what the charts are saying. So there's so many charts in alignment here, and again, potential bullish developments, and need a little more work to firm up that bullish case. Otherwise, we take one more thrust down, and then we can step in maybe pretty aggressively on the energy sector. INT, World Fuel Service Corp. This one already has confirmed. You can see that PPO crossover. So we've confirmed a divergent low. It's got a pretty formidable resistance level overhead right around $35. You can see all these reactions back here. So it'd be, it may be rejected. This just may be a bear market rally, and that's the end of the run. However, if it takes that out, that's a powerful buy signal. So you can, look to buy on a solid break and or close above 35, above this line here, and then your target's up there about 37.48. That would be a nice move. That's about 7% higher, and then ultimately up here to this level, and that's about a 15% gain if that gets hit. GPOR, Gulfport Energy, the same story, bullish divergence, oversold. I haven't mentioned that. And when you go back and look at all these oversold readings, even the bear market rallies off these oversold readings are good for gains of, that last one alone was, what was that, a 21% rally? And it doesn't look like a lot. The bigger picture is the trend is bearish, but you can certainly make money on these things, even just trading the oversold bounces within a downtrend. Um, you don't have to get married to these stocks, but longer term traders, if you step in here and we start to see these swing trades play out and you get in, you can put your stops at entry or raise them to protect profits along the way and let these things run. Because sooner or later, we'll probably see the end of the bear market in energy stocks. XOG, extraction oil and gas is thinly traded. You can tell just by glancing at these candlesticks, and it doesn't have a lot of trading history on this one, but these are the kind of stocks that can really run. So you have pretty nice bullish divergence. There's a downtrend line, and it goes back here. I should capture that reaction. So you quite a few reactions there. So we're pushing up against it. If it pops, even from where we're at today, that's about my first target, about 11% gain, around 1390 or so. And then up here to about the 15 area, that's about a 21% run. So again, like I said, this is the risk to reward, the above average profit potentials. Even though I'm seeing the potential for that downside break, it could happen there. The charts are setting up that way. But again, I wouldn't be doing this video if there weren't so many potentially lucrative trading ops, and gains, like I said, measured into the, double digits and even more in some of these smaller stocks. QEP, there you can see the bullish divergence. This one trades well on technicals. There's an uptrend line break, floundered around for a while, topped, couldn't go anywhere, and then fell down, and now it's in this descending price channel with bullish divergence in place, confirmed recently. And this would be your first, well, your first resistance level, of course, is the downtrend line. Then you have a pretty solid level there, about 880. But even if it can get up there from here, you're talking about a 20% run almost. OAS, nice, clean, bullish falling wedge. You have support there, that previous reaction low right here. And so we're close to it. So, like I said, there's a potential. Some of these stocks could have another thrust down here. You can see I moved that line. I still have a couple reactions there, and that would be a nice buy. Step in and buy there around 7. Well, the actual level's at 763. You might want to step in a little shy of that. We're close enough now. We're at $7. I'm talking relatively speaking for the way these things swing around. And you can see if it breaks above the downtrend line, you step in around $7. Your first target after of course, after the downtrend line's taken out is up here about 840. So, a ride from 7 up to 840, you're talking almost a 20% gain. WLL, Whiting Petroleum Corp. You can see, a lot of eyes, I'm sure, looking at these 2016 lows. People waiting to step to buy in, and that's the another thing that gives me pause. When too many eyes are looking at something, and everyone's expecting or wanting the same thing, it usually doesn't happen. One of two things will happen in that case. And again, speaking generally, generally speaking here, you'll either reverse well shy of it, denying those the opportunity to step in, or you'll slice right through it, where they all jump in there and they get burned. The market doesn't like making things easy, so this is why I'm again doing this video and looking at the potential here for a reversal shy of those 2016 reaction lows, where I'm sure a lot of people are hoping to see these stocks come down to step in and buy, especially those that missed this first run. As you guys know, we were on the site. You can go back and check the trade ideas, aggressively engaging this sector on the long side with both official trades and, as always, more unofficial trades within the trading room, and milk that run. And that's where the opportunities were. And then I kind of just stepped aside. Uh, this is not this sideways grind for most of the last year. It was not really conducive to trading. SM Energy, bullish falling wedge, divergence almost confirmed there. A little more work, it will be confirmed. First target obviously would be the downtrend line, a move up to the top of the wedge, but ultimately, it looks like this wedge will break out. So expect maybe a reaction there. You can draw it out for you here. A little run up, hit the downtrend line, pull back, and then power on through. And my initial or minimum target, especially if we get a break out of that wedge, it's going to be up here about 1967 is where I have that. Um, I mean, if you stepped in here, you're talking about almost a 50% run to that target. And keep in mind, as I'm going down the list here, they're getting smaller market cap, so you're going to see the bigger gain potential. Likewise, the risk is bigger. So just remember that. I talk about beta adjusting my position size all the time. That means, going either up or usually down on my position size from an average position, let's say on SPY or something, SPY. Um, Going down in size to accommodate for the above average risk. And some of these little names, you're talking of beta adjustment of, zero point 0.5 or even less, meaning half of a regular position size or less. Because if you're looking for gains, in the 50% or more, you can certainly adjust your position size down, and that helps you to also widen your stops and then allow for, let's say, a 20% stop loss on a stock where you might normally never allow for a 20% loss on a position. But if you're taking a half a position, then that's only a 10% loss as far as, dollar terms or relatively speaking, to a normal position size. CRZO, bullish falling wedge, target up here about 1463. That's about 17, 18% higher. Another target up here about 1662, about 33% higher. GPRE, bullish falling wedge, we're at the bottom of now. Again, like everything else, waiting to see these divergences confirm. Oversold. As you can see, we're oversold back here, and that last time we were oversold, or at least this deeply oversold, I should say, at the same levels. We had a 20% rally in just a couple weeks in the stock. Oversold back here, and that led to the big trend. Okay, next one up, REN, Resolute, bullish falling wedge in the white lines here. You have a resistance level / potential target there at 35.14. The stock's only at 28.37 now. And this is one that's not a bottoming play. This stock has done well. It's certainly been in a downtrend like most everything else, but it hasn't taken it on the chin like a lot of these other stocks. So this is more of a high level breakout here. It looks like this one held up relatively well. And again, there's some potential there. So first target about 35.14. Second target would be that downtrend line, and a break over that downtrend line should open the door to new highs. DNR, Denbury Resources Limited. Nice looking chart here. Potential, again unconfirmed, but potential bullish divergence on the PPO and their RSI. What I like about this one, you can see these reaction lows from back here in early 2016. Boom, hit that to almost a penny. It's also came down to 90 cents. Now, the $1 level is usually the magic number right here on a lot of stocks because then when they get under a dollar, if they stay there too long, then they face delisting, being delisted from the exchange that they're on, and they have a certain period of time to get their share price up. So what I've noted over the years, when a stock dips below there, there's some pessimism. A lot of funds have to let it go. The institutions have to dump it. However, if the company can regain that $1 level, that's usually a very bullish technical event, as it did back here, flirted down under the dollar level for a while, regained it, and exploded higher. You can see that move. Let's measure it out for you, just for kicks and giggles. I didn't even grab the bottom of the move, so I'll go a little higher. 300% rally in just a couple weeks there. So, again, it holds to what I'm saying about the risk reward. This is a $423 million company. It's a penny stock. It's trading below a dollar. Extreme risk. You buy this stock, do not buy this without the expectation that you may wake up one morning and the stock is worth nothing. So, a stock like this, if I decide to trade it, I put in no more than I'm willing to lose and not even think twice about. So that's that's enough on that. SN, Sanchez Energy Corp, there's a divergent low. It's small, but it doesn't take a lot if this is confirmed. So look for the PPO to turn up. You can see the divergence on the RSI. And this one, even if it rallies just back up to test the downtrend line, you're talking maybe 31% or so. And you have a very formidable resistance zone here. This was a former support zone. Its stock broke down. So the technicals right now, it's obviously in a downtrend, but just be on the lookout for a reversal. And remember, birds of a feather flock together. If half of the stocks or even a handful that I'm covering today play out to the targets I just mentioned, most likely almost all of them will play out. So I like to take a shotgun approach to a sector. And again, these are my favorite names. And um, I won't pick just one of them. If I'm going to trade, I'll either do the ETF XOP or I'll sprinkle out, little bits into a dozen or more of these names to engage the sector. CRC, California Resources Corp, nice bullish falling wedge. Divergence is recently confirmed. So a breakout of that wedge would be your next buy signal. Target up here at 982. The stock's only at 717 now. So again, the gain potential as you get down to these smaller companies is pretty big, 34% to that target. Next target about 1230. That would be a 70% gain if it gets there. And that's it for XOP. And I only have 5 stocks outside of XOP. Also energy stocks. That's why I'm hitting on those. Schlumberger, this is a big company. This one's mega cap, multi-billion-dollar company. There's the divergent low, and here's the reactions back from early 2016. So we're not far off there now. Again, we could come all the way down there, but I see a lot of support more around this area here, 61, 64. So again, in this one I see just a little bit more downside. And again, this is a multi-billion-dollar, one of your bigger companies here. Um, I haven't really updated all these levels, but the key features here are this bullish falling wedge and this downtrend line here. Potential looks like the PPO is poised to make a bullish cross, but this thing needs to giddy up now, or it melts down, turns down, the divergences are burned through. COP, ConocoPhillips, just want to point out the divergent low at support. You can see this line here. A lot of reactions. We go to the left. We're a little bit below it, but close enough. We've been dancing on it. Reactions from above, reactions from below, reactions from below. So there's a big mega cap company at support with bullish divergences, or potential, I should say, divergences in place. Another one, OXY. Occidental Petroleum, you had a divergent low. You can see the divergences down here. And this one already tested its early 2016 lows. And it's actually been dancing above those levels for a while. So there's the case to be made for this one. It's recent divergent low at key support. So again, it's all about risk reward. I can't promise you these guys are going to play out to the long side, at least not right now. But if they do, fewer things are more objective than buying a stock that is oversold, fallen to support, especially following a divergent low. And that's exactly what we have here. So you've had 1, 2, 3 tags at that level successfully defended already. And I'm referring to that 2016 reaction low, almost a fourth. You step in here, it might have a little more downside. Anything's possible. Maybe it trades sideways for another few months. I don't know, but all I can say it's objective to go long at support with a stop not too far below, maybe on a weekly closing basis. It all depends on your trading style. A couple more, two more. Hal, Halliburton, nice falling wedge. Divergence there, flatline divergence on the PPO, positive divergence on the RSI. So if you look at this, when I see a stock in that clear little downtrend like that on the daily, I like to zoom in on the 60-minute chart. And when I do that, then I can see the divergence a little more clear there. Bullish divergence, bullish divergence. There's that downtrend line. Looks like we limped above it, but we haven't really exploded. That's not what you want to see following a breakout. So ideally, you want to see volume expansion, impulsive buying. So we did break out, but we really haven't gone anywhere yet. That doesn't mean the breakout will fail. Just something to watch. Now, you want to see us get above the top of that zone. What I did there is I captured those recent reaction highs. If we can break above there, that's bullish. And if we can't hold that level and we fall out of that recent consolidation zone, we're going to go to make a back test. We may keep going lower, or we may back test the line and then move back up. So again, that's just zooming down on that 60-minute chart on that one. And last one, ETP. Again, these are different. This is oil and gas midstream. That's the subsector they're in. And Energy Transfer Partners LP is the name. Bullish divergence, nice strong divergence, almost confirmed on any more upside if we get it. And you can see there's a little gap there to contend with. If and when that stock takes that out, you have this downtrend line to take out. That's our primary downtrend line. So that would be a pretty powerful pretty powerful buy signal if and when that gets taken out. And you can see, just target these previous reaction highs, and as in if and as each one is taken out, I should say, that would be bullish. So you want to see a move, you want to see that gap taken out, you want to see the downtrend taken out. Each of those would firm up the longer term bullish case that a lasting bottom has been put into the stock. And last one, I told you this would be the last one, and I lied. This one I mentioned in the trading room the other day. Took this one personally. I mentioned it as a buy either on a break above 150, or you could buy it at 135, which is where I posted it right after this wedge breakout. You can see nice downtrend line, bullish falling wedge, divergent low. And again, this is a small company. This is a $33.8 million, so about a $34 million company. This, illustrates that point about risk and return that I talked about. From that 135 entry, trying to grab the line. I'm close. 132. That thing already ran just a few days, 74%. Cuts both ways. That stock could have turned around, and I could have woke up reading that the company was filed for bankruptcy. So I didn't have a lot of money in there, and I'm still in it. I'm holding out for that. My sell target set just below that 270 level. But these are the little names, and a lot of these ideas I'll share only in the trading room because they're too aggressive. This stock was, a penny stock recently under that $1 level, and just like I talked about, it took out that $1 level, traded below a little bit, but regained it and had that explosive move. I think there was another stock that I covered in this video with the same, at least the same potential chart, that it just dropped below the $1 level. So that's how risk reward cuts both ways. So far this one's played out, but it's not over until you're out of the position. So I can see it struggling here. It looks like that 50-day moving average so far. If you see that yellow line right here, I'll turn that up for you. I do look at these MAs. I don't always talk about them. And if a moving average, if a stock trades through it like it's not even there, I ignore it. But this one, you can see it capped all these advances here. There was an intraday spike, but every time the stock closed at or below the 50-day EMA, tried to break it there again. And so that's now the next buy signal as well. So this one may have more potential, and I may even we'll take partial profits just below that 270 and let some of it run if it can take out and close above this 50-day. But from here, what I can see a pop above there intraday, come up, hit that 270 level, and then close back below the 50-day. So, as of now, I have a standing sell limit order. I'll just probably let that one go now that I look at this. And I can always buy back in. If it takes out that 50-day on a closing basis and takes out the 270 support, let's say it rips up here, comes back and back tests 270 or the 50-day, then that would be the next buy signal. All right, let's wrap it up there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.